thanks everyone for joining us today in this webinar. We have today the founder and CEO of PhonePe, Sameer Nigam, and also the founder and CEO of INDwealth, Ashish Kashyap. Everybody knows them, so I don't know how much of background I should give, but both of them are ex-founders. Ashish was the founder of IBIBO Group and then Go IBIBO before finding INDwealth, which is in wealth management. Sameer Nigam, also did startups in the past. He was SVP of engineering at Flipkart before starting PhonePe. So in this panel, we have a lot of experience from across fintech and financial services, and as sort of leaders in this space. So first of all, thanks everyone else for joining. All the friends and colleagues from the industry. This session is we are calling it Braving the Crisis with Tech and FinTech. This is organized by IAMAI and MEDICI together. And I would right now just jump into the theme and start kind of asking questions to the panelists here. So we all know that these are kind of unprecedented times. Nobody has seen a crisis like this. Nobody knows how to deal with this. But what we are trying to do here is try to understand from people who are there on the ground, who are dealing with the crisis at a large scale and running big organizations, and see what is their response, how are they dealing with the situation. Obviously, these are uncertain and very challenging times. So in times like these, you need tools and you need inspiration. We believe that fintech and tech in general can actually provide a lot of tools to deal with a crisis like this. But we also need a lot more. We also need inspiration. And that's why, we are organizing a session to see, how we can learn. So maybe I can start with my first question to you, Sameer, that how are you coping with, the fear, the panic, which is there, which this crisis brings to us, and how is the business doing overall?
I think, there is anxiety. I wouldn't categorize it as fear, honestly. As old as I am now, been through a few other crises. I started my career in the tech world in California in 2001, when literally every company I could think of went under in a span of 60 days after I graduated. It was a ghost town. I unfortunately was also right in the heart of the financial capital in New York when the 2008 meltdown happened. So I've seen a few of these cycles. I think it's important to just acknowledge that while things look scary, science is at its peak. It's been at its efficient best in humanity's life cycle, and this too shall pass. Now, if you start with that and you park fear should stimulate some sort of blood rush where you can start sort of acting fast. But as they say, don't let it rush to your head. You'll start doing irrational stuff. So I think the first couple of actions that we took as far back as March 12th is we initiated work from home as a mandatory policy for everyone except for our offline sales force on March 12th itself, before the Janta curfew. And that gave us a good 3-4 days to rehearse on this whole working with Zoom and Hangouts and stuff before I think some of the others. So that helped, to be honest. We got into a rhythm. Right after we heard about the Janta curfew being announced, we also made it mandatory for all the offline sales force to stay home, and there's about 8,000 to 10,000 of them. So I think for that lot, for people who have to be on the ground physically every day to do their jobs, it's been more frustrating because they're not able to sort of help. I think from an inspiration or leadership standpoint, I think we're fortunate partly. I think it's important to acknowledge that we're fortunate because we are well capitalized at this stage. So we have a little more runway than, say, younger startups. And it is unnerving. I've been in a very early stage startup myself. But what we've done is, the first thing we did is we assured all employees that nobody is going to lose their jobs. It will be the very last resort. We will cut the lights and the food in the cafeteria before we cut anyone's job. I think it's important in times like this. I think in India in general, that's going to be the biggest problem that we face. And it won't be for a lot of people on this call who can actually, if you can afford a laptop and you have data at home, then chances are you're in the tech community or fintech community. So it won't be carnage here. It's the MSME segment. So preserving those jobs is very, very precious right now. The second thing is just acknowledging that work from home, while efficient, creates a whole bunch of other issues: burnout, social isolation. So, actually, 2 weeks into this program, we call it a program, we instituted a mandatory DNWFH, do not work from home, last Friday, Saturday, Sunday, because people have young kids, they have family, they have their elders at home, or they're alone at home and they have nobody to look at, talk to. So decompression and just getting away from all this negativity and the anxiety around you is also very, very important. I think staying mentally grounded and happy is also very important.
Mhm. I really like the point you made about not bringing sort of fear. Fear should not be affecting you. But I also feel that this crisis is kind of different from any of the other crises which were there in the past. I was reading this article where they were making an argument that the 2008 crisis started at the Wall Street and then came to the main street or the masses. The 2001 was also very different, but this one, it's affecting a very large section of the society first, the main street, and then it's coming to the economy and the financial side. So, Ashish, over to you. How are you coping with fatigue and fear and panic during as an organization?
I think we're at an interesting time. Firstly, we are starting from ground zero, and it isn't that we are at this 50 or 100 crore rupee revenue run rate, which goes down to 5 crore. Obviously, if that would happen, that there would be panic. So that's one interesting thing. We're starting from ground zero, building from grounds up, and combined with, I think we're also lucky to have the right capital and partners on board. So I think these two things are interesting. But having said that, one of the things that we have really focused is to overcome this pain is to get the teams really busy with targets and goals. It's absolutely clear that while this situation is severe, unprecedented, and at the same time, we seem to be at the right spot, but we also don't have infinite timeline. So my message to the team is that this is the time for us to execute and deliver on the goals. So one of the things that we've done since we've been working from home, which is actually March 16th, before the Janta lockdown, has been relentlessly chasing our targets and milestones and really having the right cadence, not wasting time, not dropping the ball, and essentially whatever product execution we had to do, which was in normal circumstances taking 8 weeks or 9 weeks, we're actually beginning to see that execution fasten. Of course, there is a bit of, we do have these enterprise clients now where we obviously have friction in terms of reaching out to B-ish or enterprise-ish clients. But in general, we feel that keeping the team super busy is extremely, extremely important. The other thing we're seeing is that let's use this time to improve our platform and service. I think one of the things that I also saw when I was building the previous startups, that also came out of such uncertain time, not as severe though, but that also came, out of such uncertain times. And lastly, what we're also seeing, given that our application is all about helping people to monitor their money and take timely action, the value proposition of bringing all the money together and all of their balance sheet in a single app is helping more during this time. And we're seeing enhanced engagement. We're also seeing enhanced signups, given that our audience is very, very niche, the top 15 million users of the country. So very, very interesting. And I think my message to the team is that, listen, let's just work harder. Let's just chase the targets.
Mm-hmm. Okay.
One interesting thing I can tell you is, we've put in the system called an OKR system. I used to follow the OKR system during my Google days, but it was refreshed again by Bhavin of Zeta. I'm sure most of the people would know him. Mm-hmm. And he actually gave a refresher on the whole OKR system to 30, 40 of us entrepreneurs. And I must say we've executed it and it's a game changer. It's completely a game changer, something which I would really recommend everyone to do. I wish I'd done that. I wish I'd embraced it a few quarters ago, especially I was exposed to it during the Google days.
Okay. And, it's a little bit of a fan moment for me because I'm a very heavy user of both PhonePe as well as INDwealth. I love the way that you are kind of sharing content which is very customized and also has a lot of nudges around advisory in INDwealth app. So great job. Sameer, again, same, with PhonePe of it. Um, uh, I wanted to ask you that, Sameer, any specific measures that you and your firm have taken, during this crisis that others can learn from?
So I think one to Ashish's point, whatever roadmaps were in place, we made sure that every team continues executing hard, and productivity definitely is at an all-time high for things that were already planned out, right? Because when you're in the workplace, in fact, there is more sort of interruptions to, especially the engineering life cycles, software development cycles. Having said that, group of us, we've identified 4 tracks, very short-term strategic opportunities. And I think a lot of startups should be thinking in sort of these dimensions. One, how can you slash all non-essential costs? The reality is the longer you're in business, some cruft builds up and you don't really think about it. And a simple example I'll give is when we started out 4 years ago, there's some regulation that said you need to send an SMS every time a wallet is created. The world moved on, everyone's on smartphones, PNs and whatnot. And you may not have cleaned it up. We realize at our scale right now, we're spending almost 40, 50 lakhs a month on just that one line item. It's just totally wasted. So we sat down and made a list of all the non-essential cost centers and just divided into teams. It was like, took maybe 3 to 4 hours. But as entrepreneurs, it's very rare that you get that deep into the operations across the company and can get that work list. Just started slashing really hard. 0 jobs. This is just operating goodness. The second was around growth. So in any downturn, depending on the context, something always grows, right? It's the nature of life. So in here, for example, what we are seeing is online content, online news, gaming, paid education. A lot of verticals have opened up in an unprecedented way. So instead of focusing on Flipkart and Amazon and Ola and Uber and Swiggy and Zomato and the sort of perennial big boys in the industry, now you're basically looking at, okay, what kind of solutions can I build for these new verticals with them? What kind of partnerships can you actually build there? And continue growing on your financials, right? So one is revenue, the other is cost. And I think that's imperative. The younger the company, the more runway you can generate by just growth hacking. And specifically, I think founder-led activity there is very useful because you can lift certain guardrails which younger employees in your company might think are, these are dogmas planted in for good reason, perhaps. But in wartime, you weigh differently. The third, I think, is a lot of focus on CSR activity, to be honest. And I think that's just like a need of the hour. So we worked through the lockdown, actually, as emergency workers. We got IRDA's permission to put out this coronavirus insurance product for a lot of people who don't have healthcare. And spoke to our board, not taking any commission. So we're able to price it out at as little as $150. That doesn't happen in normal times. Normally it'd be like $299. It'll only cater to a certain TG, all these restrictions and health forms. So this is a straight up only digital 3-minute thing. And it's obviously not surprisingly being actually purchased more than any other product we've seen in the financial services segment. We've launched a donation drive with the PMO's office, which was the PM Cares Foundation. We were the first out of the gate there, and doing whatever we can behind the scenes to sort of encourage other businesses to help. I think that is partly because, again, we work in a very broad ecosystem play at PhonePe, and therefore we're seeing the data points coming in. And to your point, while we're not fearful, I think you just have to be very cognizant of the fact that this is going to be a slow recovery. Mm-hmm. And I'd say the fourth one, and depending on the size of the company or the state of the company, growth, right? So revenue, cost, what you can do to contribute is growth. Now, growth, interestingly, I think FinTech is FinTech's going to have a purple patch here. As selfish as it sounds, people will want social distancing, will demand digital payments to grow. So we are seeing unprecedented organic growth. You get to slash paid growth and you can just grow on organic growth. Financial services, to Ashish's point, we're seeing liquid funds at an all-time high. We are seeing insurance purchases at an all-time high. So certain verticals will grow. Can you get the right message to the right cohorts?
Yeah.
So these 4 initiatives.
Yeah. I was talking to a Hong Kong-based robo-advisor called 8 Securities yesterday, and they also mentioned that they are seeing like a 400% growth, across the metrics. And so, Ashish, question to you: that what are you seeing currently, and are there any opportunities or products or services that you never thought about before, and right now they just seem to present themselves?
Yeah, let me actually firstly say that in our context, it's even more interesting because the audience that our app services are these audience were being serviced by traditional banks, typically old world offline relationship manager going to these customers. And from that point of view, suddenly a platform like ours has been a boon for them, because what the application really does is it brings their money together, their investments together, their loans together, their expenses together, as you would have discovered as a user. And it's really doing an audit on it and telling him to take action. Listen, move your money from liquid fund to arbitrage because it's tax friendly. Move your loans from A to B. So I think that's one set of activity which has really helped us to acquire these very, very elusive users. These are very, very hard. These are users with average asset size of 2 to 3 crore rupees. Super, super hard. Unfortunately, as you know, there is a huge concentration of wealth in the country amongst the top 15 million. The top 15 million also contribute to a very large portion of a tax-paying audience. So I think this is a very interesting time where the traditional bank RM who used to go to these customers, suddenly now we have the digital system talking to the user. And we are, of course, increasing the engagement rate. The other thing that what we've done is we've been able to, in a very personalized manner, help deliver actionable advice to consumers. So for example, recently there was a moratorium announced by RBI.
Yeah.
But what did it mean for users? So we know exactly what is the loan book that a customer has and what's his upcoming EMI. If he's not to pay, what would be his extra burden? We were able to tell the consumer and tell the consumers proactively that, listen, you better pay your EMI. Another one, RBI recently reduced the repo rate, and a lot of our users have large home loans. So what is the reduction in home loan EMI that the consumer should receive? And especially at these unprecedented times is something which we, again, not only advise, but we get it done for the users, right? We'll either switch them from one bank to the other. Similar EPF, right? We have about a large percentage of our users tracking their employee provident fund. So on one hand, a customer has taken a very large, expensive loan. On the other hand, he has EPF. Should he be using his EPF to reduce his encumbrance? Yeah. So these are the kind of things, and asset allocation. So these are the kind of things that the platform is able to deliver to consumers in such unprecedented times, which becomes very, very super valuable for the users.
And I'm glad, I think both of your organizations, Indians have been kind of fed with spam messages, from banks, which are all about the same message being sent to millions of people. But I'm seeing very specific advisory nudges, like the thing that you're mentioning. I also got that email which clearly said that if I don't pay the credit card bill for 3 months, what's going to happen? And it was very specific to me, and loved it. So it's a great feature.
Thanks.
Sameer, back to you. You have covered it a little bit, but is there any new product or service apart from the insurance product and a couple of things you said? Is there anything else that you have come up with or you're planning to launch?
So actually, the largest amount of effort has been around this tab that we call the Stores tab. Essentially, what we've been trying to do for the last year and a half was get all of the small kiranas and all the shops we have. We have about 10 million merchants in our database with their lat long. So we've been trying to actually solve for discoverability of businesses, and it's been on a slow bake, to be honest, right? This focus was on Switch and a few of the other sort of platforms earlier. This was on a slow curve. Immediately after I think Janata Curfew, the day Janata Curfew happened, there's been an explosion in activity, both in terms of partnerships with businesses like Swiggy Go or other delivery partners who want to reach out to these merchants and offer delivery services to them is the need of the hour, as well as consumers actually asking, okay, normally I've not used this, but you seem to have all these shops. Can you tell me which ones are open, which ones are delivering? So this is actually where very creatively, those 8 or 10,000 sales folks who are sitting at home started actually speed dialing their merchants saying, use the PhonePe for Business app, start setting these flags for us using a combination of data the merchants are giving us and a combination of algorithmic data based on when we saw the last transaction and the first transaction on the day over a trend line. We actually launched a product, this was just 2 days ago, where customers can now go in and filter pharmacies and groceries specifically by availability and those who are willing to deliver. Similarly, the cash out product we put a couple of months in, that's become more relevant because ATMs are a no-no right now. So again, so I think over the next 90 days, I'd say the biggest focus in terms of big sectoral like innovation will be around helping all these kiranas and sort of hyper local shops re-engage with their customers digitally. And I think this speaks to sort of wartime efforts being on a much faster footing than peacetime. This might have taken 12 months, but then in the almost near emergency like situation makes everyone respond in the ecosystem way faster, way faster.
Right. I mean, there's a joke going around that everything that we have tried for digital transformation, this may be the biggest of those things ever. My next question is really about that, let's talk about the government and industry bodies and the ecosystem, the regulators around. So there's a two-way question. One is, what are you doing for them? And second part is that, are they doing something for you as a company or as an industry?
Ashish, you want to go first?
I mean, I have a wish list of what they should do, but I can give you an example, right? So we have this very awesome product, which is enabling consumers to lower their home loan interest. Now, everything happens digitally, but when it comes to fulfillment, because there are banks at the back end, we're not a bank ourselves because obviously we want to tap into low cost of capital. We see that the fulfillment disbursement is still analog. And I just feel that with this unprecedented event which has happened, and with even RBI saying that, listen, everybody should get digitized, I just feel that, and as I learn the financial services ecosystem, there is too much broken. There is still a lot of this stuff which is analog, and there's no reason. And I would really like to step up, assemble a team, and happy to help the ecosystem to digitize these use cases. See, most of the fintech have gone behind these personal loan products, quick loans, 2,000 rupee loan, 3,000. But when it comes to these kind of transactions, or even when it comes to moving 50 lakhs from A to B, the RTGS and NEFT fails. People have to fill that physical NEFT RTGS form, which is quite pathetic. So I think, so there's still a lot of digitization, and I'm happy to participate. I think we should also use this opportunity to reflect upon the way we were thinking KYC, right? Which was this cryptic way of doing the video KYC. I think the regulator and us as an ecosystem should really rethink of reducing friction with stuff like that. I think, so some of these are the massive challenges which are there. I mean, the keyword I would like to use is we should use this opportunity to say, how do we make this frictionless? Why should we be marred with so much of friction? There's no rational reason for it. And not even the best of public sector banks and private sector banks have any answer to give. Yeah. So I think that's really, if you ask me, that would be the wish list. And I just feel that there will be massive acceleration. Right now, if you see the bottleneck for me and for this whole ecosystem is that besides payments, which of course PhonePe and the whole UPI stack is obviously a beautiful example. But beyond that, let me tell you, even a lot of investment products, fixed deposits, there is huge amount of friction. And I think we should work on it on a war footing.
Anything specific right now, given the crisis, that you wish that the government or regulator would provide you as a company in this sector?
Yeah, I think these were the wish lists, right? I just talked about, right? I think it's very simple to execute. There should digitizing these. I mean, I'm happy to build the digitized system for 2-3 pilot banks and it can be extended.
Okay. Sameer?
I think I'll answer the I'll answer the first one, which is, so there's a lot of really good architects and young product managers and others in the company who are volunteering, and I think that is volunteering with their local city or state health ministries to help build out these applications. I think a lot of entrepreneurs have gotten together and are collaborating directly with MHA and NITI Aayog. So they've opened up sort of public-private collaboration forums in terms of building track and trace solutions, even Arogi Setu and a lot of these apps. There's a lot of people from the industry behind the scenes working with them. And I think that's definitely required, because I think the government understands that technology can play a very, very critical role in limiting outbreak. And so while we're talking about how you'll come out of the coronavirus outbreak, I think the risk is that people become impatient and forget that, well, we've still not peaked. So doing everything you can there, that's the sort of the 60-day effort. The second is bunch of groups, part of a few of them, where people like Mukesh Bansal and some of the VC funds and Matrix MD and others, they've started creating small funds, 50 crores, 100 crores for specifically like sharp shooting on problems like job creation resurrection or healthcare provisions and stuff like that. A lot of work happening there. I'll come back to the thing that you said, which is what can the government or regulators do? I think, especially in the payment space, there's been an unnerving amount of fluctuation in policy over the last couple of years. While there's been unprecedented growth, the business model becomes more and more uncertain. And as if just to sort of highlight that, they decide to make MDR zero overnight. I think that needs a correction, and it needs a desperate correction, because you can't lean on privately funded investor-backed companies to do social good for perpetuity. Companies need to have a positive revenue model. It can't be something different than your core business. If my core business is solving digital payments at scale as a payment gateway, say, I need to make money on that. This whole razor and blade strategy of you'll make money on ads or something else, very, very hard to do. Two, the data privacy thing is also hanging like a sword, because they've been talking about the DPA for now 2 years, and they just need to come clean so that everyone knows how to move forward. I don't think this is a today problem. It's just at the precipice where everyone who comes out immediately from here is going to be wondering how quickly can they get back on their feet. We need clarity fast. So that's thematic. Tactically, I was mentioning things like SMS. We're making a list and we're going to present it to RBI, and I might actually lean on IAMAI to also help. There are certain costs in there that are just absolutely irrational. SMS for everything with an open rate of less than 0.5%. There's a reason why all of us use WhatsApp or use other chat applications. SMS has become a spam box. So instead of saying, let's take risk-based, algorithmic, machine learning-based solutions or approaches, we are still in a regulation-based approach to growth. It is very prescriptive and limits innovation. It doesn't accelerate innovation. So I think to Ashish's point, KYC should be opened up. Put the obligation on the companies, because you're creating exposure for yourself and the system. We should be opening up 24/7 processing as opposed to hour-based processing. There's still, I'm still aghast at how many of the broader financial services have settlement windows that are like once a day or twice a day. I mean, it's just mind-numbing. That's the beauty of UPI, by the way.
Yeah.
Information settlement should be 24/7. Real financial instrument settlement can happen once a day. Information settlement should be 24/7. It's like a river flowing. So it's easy to make a list. What we need is just like all of us in the startup ecosystem or fintech ecosystem are moving on a war footing, and the government today is moving on a war footing. We need a forum where the regulators are willing to actually interact rapidly. That rate of interaction doesn't change fast enough in this environment. That's a problem. Because coming out of this, you're staring at a brand new set of payment aggregator guidelines that I dare say will hurt another 50, 70 startups out of the 200 in this space. Those who survive MDR won't survive that. We still have no clarity around full KYC. I mean, fully video KYC being allowed for financial services. Is it not? How exactly will it play out? Because even there, they've basically said you can do digital KYC, you can do video KYC, but the CS agent must be having a live interaction.
Yeah.
My Zoom interaction is barely good enough to hold 2 webinars in a day. What's the point of switching to video KYC if I have to have hundreds of people there? So I think some of these things, they're trying to still think of a digital way to do what they were doing previously. What needs to be penned down actually quite simply is what is the intent, and then let the technology entrepreneurs come back with other risk-based approaches. The West has been there for a while. The East is there in the fintech community. Whether you take China, Japan, Korea, or you take the US and UK and the rest of Europe, they've been there for a while, which is why innovation is way faster. We need to be able to unblock entrepreneurs to move faster.
I'm going to change the track a little bit. There are a few questions from the audience. So I'll take a few questions here. Salil Ravindran is asking to both of you, have you observed a spurt in savings-based investment since the start of the lockdown? Assuming that the top 15 million saves on fuel, commute, entertainment, what has been the consumer response to a higher disposable income?
At least for us, we are seeing the biggest spurt actually in gold, digital gold, because I think people can't go into a shop and buy, but the gold prices are fluctuating, and then people typically revert back to gold in this environment. So gold's shot of the charts. The second, as I mentioned, now we don't deal in equities, but in terms of the funds, again, people have gone more conservative and settled on liquid funds because saving rates have gone down. Stock market's volatile. So definitely seeing a surge in conservative behavior and capital preservation.
Yeah, we actually have seen two behaviors. Given the customer set is slightly more evolved than a mass user base. So we've seen when the market PEs, the days it's hitting, people are making entry into equity. So what we call in our the jargon we use, or the term we use, is rebalancing. So we see a lot of rebalancing happening. And then we see a lot of people right now, as Sameer said, moving their money into overnight, which basically is larger than savings account or sometimes larger than fixed deposits. And in our case, the toggle to that overnight would be what is called as arbitrage funds. So arbitrage funds actually works well for a high tax paying bracket customer like Sameer and Amit here. So yeah, so that's really what we are essentially seeing. So we're seeing a lot of rebalancing because our system is able to monitor what is the PE, what is the growth rate, what is the momentum of the market, and on the dips, those signals helps the consumer to move his debt money into equity. The other thing that we're also seeing is with the interest rates changing, there is a movement from long term to short term. And I think people are now also beginning to realize that the market in general has a high credit risk. So messaging from us, our automated messaging and otherwise, is to basically be in very, very high credit worthy papers, not to be cowboys for that extra 1%, go into a single A rated or those structured products by a lot of evil distributors out there for commission. So I think we're seeing a lot of balancing of money going on right now, and the new money goes and sits into arbitrages.
There's another question from Abhinav. Digital transformation is a logical push as a result of this situation. Should we not work on friction even on physical banking? Why should ATM cards need PIN? Why can't biometric cards be promoted or face recognition tech be adopted?
So I have a different view on this. I think ATMs in general, right? This is a bit of a sore point. Goes back to the regulatory side. We have barely 1.2 lakh ATMs in the country. You take the top 10 cities out, you're talking about 50,000 in the balance of India. 1 billion people, 50,000 ATMs. You cannot get ATMs to the people who need them the most. Because let's face it, in the big cities, we are able to actually spend digitally with cards or apps or whatever it is for a lot of our basic needs. So where cash is being used the most, ATMs are not available. Trying to innovate at the ATM level when the business model itself is broken won't scale. And this is why we'd actually introduce the cash out part. The irony of it is peer-to-peer payments on UPI by design, by societal design, it's comment back, are free to consumer and free to the merchant. In fact, the beneficiary should never have to pay anyway. You're receiving money. It took us less than 6 weeks, 8 weeks actually, to impanel over 1 million merchants for this. Because we said customers will come, they should be able to get cash out. The average withdrawal at an ATM in India is about 1,500 rupees, right? Why on earth do we even think about biometrics at ATMs when at any of these outlets, you can use a whole number of apps? There's about 45 apps today in the market, popular ones, where people can actually go in, scan a QR and get cash out. The problem is not with that. The problem is that any disruptive and step functional innovation very rapidly wipes out existing revenue pools. And this is where, again, because regulation is moving at the pace of the incumbent, not at the pace of the disruptor, we are stuck with a solution that is just by design inefficient. Cash moves in the merchant outlets and the shops way faster than it'll ever move through an ATM. Where you're spending the most, people should be able to withdraw. This problem is solved. We're not the first country to think of it. And in fact, we should take a cue from developing markets in Africa. If you see I'd encourage everyone here to read up on M-Pesa in Kenya. In a market that's war ravaged, everyone started using phones for payments. 70-75% market level adoption. India is still at 14-15%. So let's not try and improve what's broken. That's like putting damper on a pothole. Let's start thinking about super lanes and solving a different problem.
Okay. There's another question. I think this one, Ashish, for you. Abhinav Agarwal is asking, digitization requires human interface also for customers like wealth management. Will they cut out human resources?
Yeah, okay, I think the question means that will the current RMs from the banks will get cut out? Would that?
Yeah.
So my sense on the topic is that for large value complex relationships, there would always be a need for coordination and need for overall advice. But when we talk about mass users, mid-income users, I think typically digitization will definitely not need human capital to be involved, because otherwise it'll be inefficient and you won't be able to deliver low-cost advisory at scale. But for large complex treasuries, large complex family offices, people with multiple families, where a platform like ours, for example, acts like a virtual family office, there would always be a need for that virtual family office manager, who's kind of mapped and attached to that particular family. So the role will be there. But I definitely want to say one thing, that the folks who are in the previous type of a wealth management setup, which is like distribution for setup, either they will need to evolve to become full stack advisors, or they will have challenges in keeping evolving with the situation. They will be instinct. So my advice to a lot of the guys in the banking world at this stage is that either they need to transform themselves and become full stack advisors, ready to understand not just the relationship and tea and coffee with the customer, not just the B2B kind of a sales process, but also be able to advise and understand capital markets.
So we are in like the last 4 minutes of the conversation. I just have a couple of more questions that I'll finish from my list. So let's talk a little bit more specifically about your companies and growth and customer acquisition, right? So now, given that where we are today, what will happen now to your customer acquisition techniques? Is the growth going to come from a different channel? How has it changed from the past? What will be the number one source of growth? And will the CAC go up, go down? Any views on that would be very helpful.
I think in our business, we see CAC going down actually. it was already starting to trend down for the simple reason that I think there's been a bit of consolidation in 2019, at least in the UPI space. And therefore, everyone's not constantly spending so much on cashback on CAC, right? There's a distribution cost, and then there's actually the converting a user into a customer cost. I think in general, across fintech, seeing across various categories, whether it's even lending and other stuff, I think CAC is coming down a bit. And I think in this market, in fact, I think most people will focus on organic goodness, which is a good thing. I think the Indian startup ecosystem in general, we've needed this push for a while. Valuation chasing has required people to grow at any cost. And I think rubber will meet the road here in an unprecedented way. It's almost like a 10-year cleanup. Uh, so kind of welcome it. CAC will come down. Growth, I think for, again, payments, lending, neo-banking, all of these sectors, I think we're all in a purple patch in a sense because the need is going to be higher than ever. Access to physical alternatives is lower than ever, and you don't know how long. Um, and these are essential services. So whenever you have critical services that are going digital and you have a forcing function, it's sort of what Demon did to digital payments in India in the first step. Now you're seeing that for financial services overall. So those who can exploit and move fast, I think should be able to actually shine in this market.
And how does it compare with you, Ashish?
So far we've completely grown through word of mouth and organic. We've actually not even done a referral program like typically every app would do. And, because of our focus on the top end of the pyramid. But what we are going to now definitely do, as Sameer was rightly saying, that, suddenly the need for financial services like ours to become accessible has got accentuated. So we would actually use this opportunity to do inorganic activities to acquire our TG, which is a very elusive at a lower cost. So we would actually kind of step on it during this uncertain phase.
Mm-hmm. I wanted to talk about a little bit about finance and accounting. So, Sameer, you talked about cutting down costs and taking those measures. So, what about like your vendors, right? So, on one hand, if you kind of delay their payments or do anything bad, that will be bad for that guy, and a good for somebody might be a bad for someone else. So there's always these things. And is there anything else that you're doing in terms of F&A, maybe in terms of account receivables as well? Any new techniques, any new ideas that you have thought of?
See, honestly, as I said, my first startup started in a bust. And when we were really small, I've been on the other side, where people, much bigger companies, just drag out their payments, try and look cute on their working capital. Maybe they have real needs, uh, and you remember the ones that were kinder. And I think a lot of us at PhonePe, at least, we are in our 40s in the leadership team. It's not a very young startup in that sense. So I think age brings some level of balance there. And the view we've taken is we will keep paying everybody. In fact, we have about 1,000 CS agents that are all off roll. Now, by design, we are very clear with these partners. As we build more automation in the normal scheme of things, we may need less agents. Having said that, the business has typically grown faster than the automation. So we've still sort of kept them. But in this window, there is absolutely no excuse for deferring those payments or canceling them. As I said, I mean, vendor payments, people who worked with you and been part of your growth cycle, if it's sort of like taxation, right? Either you believe in the broader shoulders bear the maximum burden philosophy or you don't. And I think each company's DNA will speak. We are taking the view that we will slash all non-essentials, take out all the craft, fix the product, make our advertising more efficient. All of those are real fair play opportunities. But cutting out vendor payments, I mean, I'm not sure I don't know what kind of culture organization you'll come up with when you come out on the other side.
Yeah.
I'm not there. I'm not there yet.
Ashish, anything you are doing for accounts receivable or just managing, finance better?
Most of our accounts receivables are almost in advance because there's a lot of perpetuity, except for commission revenues, of course, have some receivables, but not in stress. I think from our vantage point, we will obviously like to continue to train our current team members that we have brought on board. we will definitely not go crazy right now to say, let's just double down, triple down, because we don't know how this situation is going to unfold. It's a complete unknown for the best of the people in the world. So we will focus on training people. We will focus on improving our product, service, consumer engagement, increasing our DAO by MAU, DAO by registrations, all the metrics that we are chasing for the product, our AUM and our loan disbursals, etc. So we'll just basically be chasing these metric. But obviously, my personal expectation from the team is that at large, not just my senior team, is that they need to play the game fully, right? Like they need to give their 150%, because we don't know how the situation is going to unfold. So the room for people to lax will be much lesser. Other than that, I think I have a disconnect with landlords who are unwilling to essentially not play a fair game. So I think most of our landlords are wanting to play a fair game of saying that during the lockdown period, it's almost like a force majeure clause. So and you would imagine that rental expenses are not trivial.
Yes.
That's one thing which we're keeping an eye on. Any other wasteful expense, we are absolutely using this opportunity to just unemotionally kill it. Any wasteful expense, anything that we were trying to spend on, we definitely are using this opportunity to say, let's also bring focus into the picture.
Yeah. And there are many questions that panelists, the audience is asking. I have more questions, but I think we have extended the time contract already by a few minutes. I know you guys are super busy, and I'm really, really thankful that you spend time here. We have both IAMAI and MEDICI have been receiving a lot of requests to kind of find out from experienced entrepreneurs like you yourself on what they should be doing, how they should be responding to this. So really, really good session. Thanks so much for your time and help. Both IAMAI and MEDICI will be organizing more of such sessions with other folks as well. And a very controversial gentleman once said that never waste a good crisis. And I think that's a message that I got from hearing you, that all is not so bleak. Like, don't worry so much, don't have so much of fear. There are opportunities. Look at that and go after it. Anything else you want to say? Just last departing thought.
I'd say for everyone who's working from home, since you have some time, actually just go online and look at globally the mature economies. Look at the GDPs and see the lag from crisis. Wartime activity in every society that's really reached a high level of development has actually led to like heightened innovation every single time. Right? I mean, we are talking about coronavirus and everyone's talking about hazmat suits and plastics. If you see even the World War, canned foods got introduced because of the damn war. People innovate. You got to trust the human species to innovate. So these questions around 200 billion sort of value creation getting wiped out, ask a 50-year-old banker. When they started their career, they didn't even know what this value was. It was notional. So value is also getting created at an unprecedented way in our lifetimes. We are fortunate.
Yeah.
As much as we are talking about income disparity, income levels globally are rising.
Yeah.
Right? People are being lifted out of poverty. So let's not go all doomsday on each other and look at how you can actually just innovate hard.
Yeah, I totally agree. In fact, just a reminder for everyone that it was 2008, 2009 when companies like Venmo, Square, WhatsApp, all of them were born. So completely agree with that. With that, I think I would like to end this session. Thank you so much, both of you.
Thank you.